The final instalment to the course, Why Do Prices Go Up, is a very interesting topic that you've probably never heard of before. And this, of course, is seigniorage. And this is something that really should be taught in schools. And I think the fact that it isn't is very deliberate, because seigniorage is very important to the government in their activities and how they run the economy. And the fact that the population doesn't understand seigniorage is very important for the system to carry on the way that it is run. And what seigniorage is it's the profit between the cost of production of coins and banknotes and selling them into the banking system for face value. So it costs around 20 pence to manufacture a £50 note, but then that is sold to a commercial bank for £50. So the differential between the cost of production and what it's sold at is the seigniorage profit. And this was actually taken directly from the Bank of England's website. You can read the quote on their website, and what this basically says is that the Bank of England itself does not profit from seigniorage. It's the Treasury that does. So the profit from printing money and selling it for face value into the banking system goes directly to the government. And you can see some figures in 2020 and how much the Bank of England spent and how many banknotes they issued into circulation. And it equates to around 19 pence per banknote. Seigniorage is a tax. It's not an explicit tax that you can see, say an income tax that you can see on your payslip. It's like a hidden tax. And what it does is it increases the spending power of the government in exactly the same way that an actual explicit tax would. And it acts like a tax because people pay this through inflated prices. They pay it through higher prices in the economy rather than seeing it as an explicit figure on their payslip. And this is a very interesting graph because what it shows is that the amount of banknotes in circulation within the UK has increased markedly since the mid-70s. And the interesting thing as well is if you look back in the late 70s, most of the banknotes in circulation in the UK were £5 notes. But now there's been a massive increase in £20 notes and also £50 notes as well. So what this shows us is that not only is the quantity of banknotes in circulation increased significantly, but also they're circulating now in higher denominations. And seigniorage is a very powerful tool for the government because it allows governments to continue operating in a deficit where they are spending more money than they receive through tax receipts. And whenever an election nears, it's always the same thing. Lots of governments promise a lot of new things such as free school dinners for children, but we won't charge you any more extra tax. And you think, well, all these unfunded liabilities, they've got to be paid for somehow. So obviously you are going to increase taxes. But actually a lot of that funding comes from seigniorage. So we pay through this through higher prices rather than an explicit tax. And seigniorage in a recession is much more profitable because if people are uncertain about the economy and they're worried about their job security, they're more likely to save more of their income, which reduces the velocity of money in circulation. So the government can print, or the central banks on behalf of the government can print and issue more banknotes into circulation, and it does not increase the prices of goods and services as quickly as what would be seen in a normal time. And because seigniorage acts as a tax, it means that there's actually a level where the tax is optimized to increase the revenue that the government get without having too many unintended negative consequences. Because if the central bank's not printing enough money, then there's a missed opportunity there because the government could get more profit from that activity. But if they print too much money, then it leads to price inflation in the economy. The thing as well with issuing currency the way that central banks do is that it actually erodes the real value of debt, because the inflation tax is literally a tax on nominal assets such as bonds and cash. And since government debt takes the form of non-index nominal assets, which is basically assets where the price does not change. The value of that debt is eroded when general prices rise. So what happens is that holders of debt, so people that have lent money to the government, they suffer a capital loss and a devaluation of their spending power. What's equally as important as the central bank seigniorage is the commercial bank, because a lot of the money in circulation is actually from commercial banks, which are high street banks such as HSBC, Barclays and Lloyds, because every time they issue credit, that is spent into the economy and that increases the money supply. The key to the high street banks benefiting from seigniorage comes from the fact that non-bank users such as the general public have to put money into a bank. It's just the way that the system works. You get paid into a bank account, and these are the commercial bank's liabilities. The key to understanding how a high street bank can benefit from seigniorage is to understand that when a bank issues credit to someone and that is spent into the economy, it ends up in someone's bank account. And when you deposit money into a bank account, that becomes the bank's liability because they owe that to you. But what the bank can do is, because you have little choice but to hold that money in your bank account because you've got direct debits to meet and things like that, they know that they can pay you a very low, below market interest rate. And what I mean by that is that if I go into a bank and I wish to borrow a loan, let's say they say, yes, of course, we are going to charge you 7% interest to borrow that amount. That would be the market rate of interest. But if I go into that same bank account and try to deposit some cash, they won't pay me 7% interest. They will pay me a much lower rate. And because I'm willing to hold my money in my bank account at a below market interest rate, they know the bank can profit from the differential, the spread in what they pay me to keep money with them and what they would charge to someone else that wants to borrow money from the bank. And when we look to the future where there's potential for digital currencies to take over cash, seigniorage could be much higher for commercial banks in this situation, because as things stand, the banks are regulated that they have to hold a certain amount of cash, because if people want to withdraw cash out of ATMs, that has to be guaranteed. The bank has to be able to allow you to take cash out. So they have to hold a proportion of their reserves in case people want to withdraw their banknotes. But if there's no banknotes to withdraw because everything's digital, then the bank don't have to have that money sitting there as a just in case fund to appease the regulators. They can lend out much more of their assets, and that will be much more profitable for the commercial banks.